Okay, folks, welcome to Market Wrap. It is the 20th of September. All right, let's kick things off tonight with our positions, our old positions, which we closed out today. LABU, we opened up the position on the 13th, and we rallied up to, what did we close today? 51.76. Why did I close it out? Good question. The reason why I closed it out is that we've had a heck of a rapid run, very, very quick breakout, and we're seeing topping action. We are leaning into the third standard deviation Bollinger Band. Can it head higher? Sure it can. But I felt it best ahead of tomorrow's Fed meeting to lighten up, build up some cash so that we are nimble. And that's the name of the game. When the Federal Reserve makes an announcement, you want to be nimble. You want to have dry gunpowder so that if the market goes in the wrong direction, you could take advantage of it. Because most of the time, the knee-jerk reaction out of the market is the wrong one. And if you're listening to what the Federal Reserve has to say and not buying into the whipsaw reaction of the market and you act quickly, well then, you're able to profit off of that knee-jerk reaction. And that's what I want to be positioned to be able to do. So tomorrow's going to be a very, very interesting day, and get ready for a ton of volatility. So LABU, great trade. I know a number of you were involved with this one. We'll look to get back in. I still like the weekly chart. Here you have it. Higher lows on RSI, higher lows on Stokes. Beautiful breakout this week. I'd like to see a pullback. Maybe we'll jump back in. If we go back to the daily chart really quick, where would we want to get back in? On a retest of $47 per share. I think that would be a really nice price target for us. And the reason is simple why I like the support level. It's because we know if it closes down below this support level, it's a breakout point failure and we need to get out. So we'll just keep our losses small, if any. So that's the name of the game with LABU. Pullback on light volume, $47 per share. Tilly's, we closed this one out today. Extreme overbought stock. It really got extended. Let's take a look at the weekly chart before we talk about the daily chart. And here you have it. We rallied up and through resistance. We knew, as I mentioned last night, that the 1090 level was stiff resistance. All these holders of shares that have been sitting through this nightmare of a downtrend want their money back. And they sold. That's exactly what happened today. Also, we were leaning into the third standard deviation Bollinger Band. You had some profit takers come in. So we're going to probably pull back further. That's my guess. Could we rally tomorrow? Absolutely. That's why I wanted to be out. We closed right at support. Actually, right below support. Support is at 950. Where do we close? 951. All right, so right at support. Let's call it support. Back to that daily chart. Now, on a daily basis, we were so overbought, but it's a lightly traded stock. Shorts kept getting squeezed. Institutions kept buying. The volume has been really incredible of late, but today, clear profit taking. We were down, almost 12% on the day. That's on a closing basis, even further on an intraday basis. Now, the markets kind of sent us a signal that it was time to get out. 15-minute chart. Double bottom setup on the Stokes. We were very, very oversold. Bottoming tail at 2:30 Eastern Standard Time. We gapped higher at 2:45, and after that, we began to rally. So when you see price action like this, you need to get out, and sure enough, the shares just kept moving higher. So do I believe that the selling is over? Probably not. These days usually come in threes, meaning you have a down day and then two more consecutive down days. Now, granted, this was really a bad day for Chili's. I mean, down 12% on the day. Might we rally for a couple of days and then roll back over? Sure, quite possible. But I wanted to have, A, focus on tomorrow's Fed report. B, I wanted to have a lot of cash built up Because to me, I'm focusing on our longer term positions, and those are our commodity plays, because that's where the big bucks are going to get earned. Now let's talk about the markets, and we'll talk about our positions, and yes, I'll talk about NetApp as well. VIX rally today, big move. We are sitting just shy of 16, which is resistance. We hit that today. Actually, we exceeded it, then pulled back. So the VIX is looking very strong. Now, with the Federal Reserve coming out tomorrow, the charts I'm going to go over are not looking good. Were I long of the market right now, I would be very, very nervous, because the markets are not showing a ton of strength. Now, when I say I want to have enough cash on hand to take advantage of any action tomorrow, the reason is this, is that I don't necessarily want to go buying aggressively more commodities. I may be looking, if we get positive news out of the Federal Reserve and the markets don't respond to it, that's a big problem. So the Federal Reserve really needs to be dovish tomorrow, because I'm going to go over these charts, because nobody's expecting a rate hike tomorrow. I think that the markets are fearing a hawkish Fed for a December hike, and they won't accept it. So the VIX looks like it's ready to rally. 10-year yield pulled back so far this week. It's a down week. The dollar rallied today, and it did so on big volume. This is the biggest up volume day since the 2nd of September. Let's take a look at our intraday chart of the dollar. Overlaid in green is Nugget, if you're wondering. So our Stokes are rising. MACD is rising. Right at the zero level, the neutral level. RSI is rising. So this is a problem. Weekly chart. So what it looks like we're doing so far this week, and believe me, I hope I am wrong, and I rarely say that. I hope I am wrong. But what we're seeing right now is a retest of a breakout point, because remember, we broke out last week. This week, we are pulling back and retesting. Now, hopefully, we fail, just like we did the week of July the 25th. If that happens, you're going to see gold rip. You're going to see silver rip. But as it stands right now, I have to think worst case. That's my job. And we are retesting a breakout point. And again, I hope I'm wrong. I hope we drop. Take note of the breakout on Ultimate Oscillator. Choppy action on Stoch RSI, which is bearish. Choppy action on Williams Percentage R, which is bearish. So, a mixed bag here. Inconclusive. Way too early in the week. Let's go to a 30-minute chart. Okay, 30-minute chart. We filled the gap today that opened up Monday morning. This is not a chart that inspires a lot of enthusiasm, and I'm happy to say that. When you take note of RSI, we are putting in lower highs. If we break down below this lower band of support, we're probably going to come back down and retest the lows of the week. Ideally, we close down below 24.71 this week. If we do so, that'll be a breakout point failure on a weekly basis, a bull trap. And that will set in motion our gold stocks and silver and platinum. All right, the transports. Hollow candlestick, more topping action. Not a good sign. Volume to the upside, still below average. And this is what I mean. This is not a chart that is inspiring a lot of enthusiasm. Remember, the transports have not confirmed the new highs set by the Dow Jones and the S&P 500. They are a laggard, and that is not a good sign for the U.S. economy. The NASDAQ composite, hollow candlestick. Folks, if you listen to nothing else from me, Heed my warning about this price action. This is bad stuff. When you have a reversal day and then a hollow candlestick, the market is sending you a signal. Lower highs in RSI. Am I willing to short into the Federal Reserve? Maybe. Maybe tomorrow. Ultimate oscillator still rising, but possibly putting in a lower high. Lower highs on Stokes. Warning flag is on the track, folks. 30-minute chart. Actually, let's do a 1 hour chart. All right, 1 hour chart. The first thing that jumps out at me are all these long bearish candlesticks. But when you pull back and you take a look at this double bottom setup, which first formed on the 12th, we rallied, then retested, put in a higher low on the 13th. Now what we're seeing set up here is an inverted head and shoulders setup. So here's your head, here's your left shoulder, here's your right shoulder, here's your neckline. We'll be watching for a rally tomorrow up and through 52, let's use 52.87. If we rally through that level and close there, more importantly, well, then my bear case is off the table. If we break down below the day's lows today, well, then we'll be looking to short the Russell 2000. And honestly, folks, this chart here, Williams percentage R, is not looking good. S&P 500, more bearish action. Bearish key reversal yesterday. Today, hollow candlestick, a sign of indecision, which you do not want near the highs. You do not want that. Volume to the upside light. More choppy action on Stoke RSI. Same thing, Williams percentage R. Intraday chart. Let's use a 2 hour chart this time. Not good. You have the 50 period moving average on a 2 hour chart declining. It's going to act as declining resistance. We're rolling over. Lower highs and ultimate oscillator. IWM. This is what you call an inside day. No new high, no new low, but bearish. A reversal day. It was higher, then reversed to close lower. Down just shy of a 0.5 percentage point on light volume. Now I'm looking to short the IWM using the leveraged ETF TZA, which is a 3 times leveraged bear ETF. Not for the faint of heart if you're risk adverse. I like risk. If you want to avoid the volatility, just short the IWM. Simple as that. And believe me, I'm really reluctant to talk about shorting the market when I expect that the Federal Reserve has no choice but to be dovish. But these are academics. They really may not get it yet. 1 hour chart. Volume high into the close. We are breaking down. 2 hour chart. Your moving averages are under pressure. We close down below the 50 period moving average. Not good. All right. So again, folks, I hate to keep repeating myself, but warning flag is on the track for tomorrow. And really, before I go any further, even if they say that they're not going to raise rates in September, folks, everybody expects them not to raise rates because they can't. If you take a look at housing starts today, they were horrible. They really missed badly. And you may say, you know what, it probably had storms down south, and that's true. But building permits dropped as well, and that's a forward-looking indicator. So bad sign. Banks, XLF, more hollow candlesticks. 2 days in a row now. Indecision near the highs. You don't want that. Especially when you're trying to plow through resistance seen back here. Volume declined. So much for enthusiasm. Positions, Platinum Metals Group, retesting the lower band of support. RSI is trying to rise. It's stalled here. Volume was anemic. Take a look at the ultimate oscillator. Now beginning to hook up. We can't call it a breakout yet, but we're close. Higher low on the stochastics. They're moving higher. So now it's commodities, folks, that are beginning to show signs of life. USLV pulled back this morning, then rallied off the lows of the day. Good sign. Volume light. Higher low on Ultimate Oscillator. Higher low on Stochc RSI. The same on Slow Stokes. So USLV is looking good. Nugget. Doji Star formation at support. I don't like the RSI. It's kind of a rounding top on this RSI. I like to see it hooking up, at least leaning into resistance, but it's not. Volume was light to the downside today. Higher low on Ultimate Oscillator. Not loving Stochc RSI. We did break out, but we're threatening to roll back over again. The stochastics are looking good. They are putting in a higher low, I believe. We have a double bottom set up on the MACD, which is good. Let's go to an intraday chart, 2-hour chart. Now, on a 2-hour chart, RSI looking rock solid, holding support, higher lows. Stochastics beginning to hook back up, another higher low. We did break down below this support level, which was disappointing, but we found support once again at the primary upper band of resistance. Prior resistance, I should say. Lower highs on Ultimate Oscillator. Williams percentage R looking good. Let's go to a 30-minute chart. So here we have the dollar putting in a lower high on a 30-minute chart. It's the green line, the US dollar. I like to keep it overlaid. But the strength of the dollar is keeping a lid on Nugget. Now, if the Federal Reserve does not raise rates tomorrow, it does not mean that the dollar is going to fall apart. It's priced in. Now, if they're dovish about the remainder of the year, then the dollar is going to come under a ton of pressure. And that will be good for gold and the miners and silver and platinum. BRZU, not loving the chart. Another hollow candlestick. It did rally today in the face of a rising U.S. dollar. Could be speculation that the dollar will drop tomorrow. Let's hope the speculators are right. Volume was light, very light, 2 days in a row. Expect these Stokes to roll over. Where else did I see these Stokes? Yep, the banks. Stokes on the banks. I think the banks are going to break down. Back to the BRZU. Let's take a look at an intraday chart because I'm close to pressing the sell button on this one because I don't like the price action. Yeah, 2-hour chart, 50 period just crossed below the 200 period moving average. We have a lot of resistance above here. The Fed needs to be very, very dovish tomorrow. Drop the dollar. BRZU will rally. If they're not dovish, you're probably going to see BRZU get hit. So we may look to book profits here. Yang, this is our short of China. Continues to retest the breakout point. Good stuff. Another down day, yes, but down volume dropped off once again. No breakout on Ultimate Oscillator. Take note, I mentioned this last night. Take note of your slow Stokes. Expect them to hook up. They're retesting the breakout point. Watch for a hookup. Let's check out the Shanghai Composite. Weekly chart of the Shanghai. All right, it's holding on to this lower band of support this week. Still not loving this chart. I hope it breaks. All right, let's talk about Deutsche Bank. Deutsche Bank is beginning to go into free fall, folks. This is Lehman type stuff that you're seeing unfold here, and nobody's talking about it. I'm in shock. Nobody is talking about the price action on Deutsche Bank. Deutsche Bank this week alone is down over 7% on the week. Look at these volume bars. This is bad stuff, and it's going lower. I took a look at the put options, the 5 strike. That was before today's price action. I looked at them yesterday, going out only a few months, and they were very, very expensive. There were a lot of options traders out there that are betting that Deutsche Bank is going below $5 per share. So eventually this is going to hit the futures markets, but they're not paying attention to it yet. meaning the markets. Let's look at the high yield debt market. Why does this matter? It's because it could be the trigger point for the next big crisis. And we know that if the high yield bond market goes, it'll take the market down with it. It did so at the end of 2015 into 2016. This looks like a bear flag to me. I think we're going to break. This is HYG. Let's check out JNK. Barely holding on to its 50-day moving average. Let's look at HYMB. It's below its 50-day moving average. And man, this is one bad chart. Head and shoulders set up on stochastics. Left shoulder, rounding top, right shoulder. We're going lower. Volume picked up. We're probably going to look to short this market tomorrow morning, folks. Hopefully they spike it. We'll short into the spike. All right, let's leave off with NetApp. We added to our short position. I mentioned this last night. What I wanted to see was a breakout point failure. We had broken out on the 19th. Today, we broke back down. I needed to see a close below 35 so I could sleep well. We did so. We were closed out right at support. I expect that we should head lower. Volume was light. Lower highs and ultimate oscillator. Rolling over on Stokes. Exactly what you want to see. So the chart for a bear looks good. Let's go to a weekly chart first. And this is what we've been talking about, right, folks? This is why we wanted to wait before getting aggressive for it to come to our price target at 35.87. And it did so. This was the discipline. Now we need to hope that it pays off. So we waited. It hit resistance, sold off. We added to our short position today. We're looking for price target number one, $34 per share. Hopefully we break down even further. We'll see. These Stokes still look good. We don't want to delude ourselves into thinking that the stock is going to go to zero. But I'm confident that we will get a further pullback on the shares. And that's it for tonight, folks. Again, tomorrow's reaction to the Federal Reserve is going to be the wrong one. It usually is. If they sell the market off, and by your ears, it sounded pretty good. They didn't raise rates. Her commentary with regard to forward-looking guidance sounds pretty dovish. Trust yourself. They very rarely get it right, that first knee-jerk reaction. Trust your instinct. Don't go into panic mode. I've been here before 1,001 times. So it's a nerve-wracking day, no doubt about it, especially when you're carrying large positions. I get it, but we'll get through it together. I'll send out some commentary. I'll send out a blurb right after the announcement. I don't know how much good that will do. I'll watch the markets. If I see anything interesting, I'll bring it up. What really matters, folks, is her statement. And that's what I'm really going to focus on, is her statement. I'm looking for, and I'll tell you exactly what I'm looking for. I need to hear her somewhat dovish with regard to a December rate hike. She needs to acknowledge the high-yield debt market being weak or weakening. She needs to acknowledge that Deutsche Bank, and she's never going to say the high-yield debt market or Deutsche Bank. She's never going to say that. She'll say something to the effect of, we are concerned with events overseas, and the Federal Reserve will remain data dependent. And what I'm hoping for her to add on here, and ready to accommodate. If she says anything like that, ready to accommodate, what she just told the market in Fed speak is this: we will cut rates if necessary. If she says that, it's going to be off to the races with gold, and you're going to see the dollar get clubbed like a baby seal. And I'll leave you with that image. All right, folks, everybody have a great evening. I will talk to you tomorrow. Be well.